morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are mid-December. Have a little bit of a sentiment change in the market, in the equity market direction. Right now the market's experiencing some selling pressure. Last week in the S&P we had 3 days of heavier volume, and as heavier volume selling that is, and also last week we saw 2 such days in the NASDAQ. So the uptrend's just under some selling pressure, and that's what we're going to call it. However, there are some interesting nuances, namely the put-to-call ratio spiked over 1.15. Now the put-to-call ratio is sort of a fear indicator. So when it spikes over 1, it tells us that people are buying more puts than calls, and often this has been pretty good at pointing out near-term bottoms in the market over this last year. By the same fashion as if we look at the VIX over the 3-month VIX, that also inverted, again showing us that a lot more fear in the market, and again that's coincided with near-term market bottoms. But just be aware these are secondary indicators. This can go on for some time. Now the NASDAQ broke through the 4,700 level. That was our first level of support. It's trading right around 4,650 at the end of Friday, and we're looking to see if it can hold the 4,600 level. The S&P 500 came down to the 2,000 level. That was level of support. We're looking to see if it can hold there. If not, it might go down to the 1950 level. Now one interesting thing to note is that the NASDAQ Composite Index, its relative strength line is at a new high. So even though it traded down on Friday pretty heavily, that line went up. So that told us that the NASDAQ Composite is outperforming all the other indexes if you compare it to the S&P 500, the Russell 2000, the Dow Jones Industrial, the same with the mid-cap and small-cap stocks. So that's just something to keep in mind. So going forward, the NASDAQ may be the strongest market if we kind of get the market in a solid uptrend. So as this time goes on in this market, we're not aggressively buying anything, but we are creating watch lists. And those watch lists, we look at stocks that are showing some really strong earnings growth and stocks that are also showing some good relative strength. And we're finding those stocks in those same sectors that I've talked about many times here. That's the medical sector, the retail sector, the semiconductors, the transportation sector. So one of the stocks I want to talk about today is Acadia Healthcare. The symbol is ACHC. And what they do is they provide psychiatric and behavioral therapy solutions to patients. They're basically growing organically and through acquisitions. In 2011, they acquired CEO Joey Jacobs, and that's interesting because he came from Psychiatric Solutions, who later got absorbed by United Health Services. And if you recall back then, in 2010, Psychiatric Solutions was a very hot stock. Now, they have 76 facilities in the US, UK, and Puerto Rico. They're having another acquisition of CRC Health, supposed to close by the end of the first quarter next year, and that's going to give them another 120 facilities. So they're growing to one of the largest psychiatric care centers, and also they plan on growing beds at each of their existing facilities by about 16% over the next year. So let me tell you about some of the numbers, why we like them. The earnings per share over the last 3 years averaged 35%. Their revenues over the last 3 years averaged 72%. Their 3-quarter average earnings per share growth rate is at 36%. And last quarter, the earnings came in at 58%. That was a surprise of 12% to the upside. And the revenues came in at 72%. So those, 53%. So those are really some solid numbers. Now going forward, analysts are looking for about 36% next quarter and about 53% on the revenue side. So those are some strong numbers. Looking forward, they're looking for an increase of 44% for 2014, and for 2015, a 34% increase in earnings. So it's a very strong company, some strong numbers, and here's also why we like it. It's been consolidating from the 54 to the 38 area since the beginning of the year, and then at the end of March, when they reported earnings and announced the acquisition of CRC, they had a nice big breakout up to about the $65 level. Ever since, they've been basing between the $65 to the $60 level. So here's how we play it. If you can take out the 63.86 pivot point, that might be one area you might want to add to. Or you can wait till the 50-day moving average catches up with it. Right now it's at about 57. See if it bounces from there, and that may be your add-on point. And if it crashes below 57, the trade may not work. So As always, consult your financial advisor, see if this trade's for you. Right now, let's just see what the market's going to do. And as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading day.